so we've done here. This is not.
No way. There's not allowing you such a clock as we fish. Something went wrong. There's a little.
Okay. Okay, so let's go here, as you know. Okay, what we do, we edit here, so we just change
The date and stuff. It's the 34th.
Okay, we need to get the
It's Chris Yelland and
yeah, let's just get that. Get the date this. Join my co-host, Steve. Eskom, Equites, CEO, and Taverna-Turisan. So we do that, change that, then we make it public. Our planes will come to Disney Power Hour. Launch public. Because they never provided to there it is. And then Alec wants the link stream. Copy. Waves. There we go. Cool. Let's figure out battery here. Yeah. Cool. And then it's on mute, so you don't have to worry about the sound. The only thing you might want to do is turn the sound of your computer if you've got it installed.
Just to mute the PC.
Yeah, I think that's there. And you can see when all the comments come here. I don't know if Alec wants to use it now. I think it's quite cool to have it in the studio.
Right.
Okay.
Not bad.
That was
Hasn't stopped today.
Yeah, we mustn't stop.
The thing that happened to trading.
Just the
No, it was counting down fine when we went to your PC. It just went.
I don't know. It does that.
We close it, we open it, it's still the same. It was like, okay, let's leave it. Right, thank you. Mm-hmm. Under the power hour time.
No, we never, because it's also there's a delay. You see, so if you go there now,
I just noticed now
see,
because I
we've got
saw
it.
us way after we
yeah.
closed. Okay.
Instead of them coming to the picture, it's hey man.
Okay, so I'll just end live.
Yeah, you just click there. Okay, so how long is that delay?
You have maybe a minute. It's not too bad.
There you go.
See? Okay, now it's coming. Alright, cool.
Cool.
He said add some excitement. Isn't that the policy tree or charge? And they may have to raise rates or something. That is crazy market. Ooh, that's that.
Right. Hi, Stephen.
Hi, is it good?
Yes. Oh, you can't see.
Hi.
The camera's just
Thank you.
facing a different direction.
I'll get it on my laptop. Hi, Stephen.
Hi, Alec. How are you doing?
Oh, man, so good. How are you?
Also good. Thank you.
Excellent. Okay, I'm just putting our YouTube channel on here. Here you go. That's yours. Okay. We went and saw our new studios today. I'll tell you what. Can't wait. Can't wait to move in. Perhaps on Friday.
Fantastic.
Perhaps next week. Yeah. Yeah. Okay, let's see.
Yeah,
Right.
PC.
A bit
The
worried
live
about.
stream. The live
Oh,
stream.
the live stream. Got it.
I'm a bit worried about this
Suppose.
sound. Okay, there we go. Okay. Okay.
Mhm.
Good. Okay.
Wait, is there echo?
That's me.
No.
me,
It
me,
was
me.
Alec.
I'm taking
Please
this off.
pose your questions here.
There's Andrea as well.
We'll ask our guests. Okay, great. There we go. Hello, Andrea.
Hello,
Why is
how are
my-
you?
I'm very well, thank you.
Hello.
Could you switch one off, please? No. number 1. That's this one.
Oh, this one, yes.
Okay, because you could hear on my thing was real bad.
Okay.
Right. Okay, guys, we've got quite a full program and a lot to ask. So what we're going to do, Stephen, is keep the intros
I think this is the Eskom guy,
short.
Sikonati.
Yeah.
It was we sorted it. It was a bit hollow.
Hi. It's the one from BizNews, Sikonati. You spoke to Justin today?
Who's that? Say good night. No, we'll find him later. We can't now. It's 1 minute to 8 now.
Okay, sorry,
Tell
we've
him
already.
We can't. It's too late.
Okay, we're going live. Somebody will call you. Okay, thank you. Right now, in a minute.
Yeah. Goodbye. Goodbye. Okay. Sorry, guys. I was just saying that we've got quite a lot to go through. So, Stephen, what we'll do is we'll keep the intros. I'm going to keep it as short as possible, and then we can talk to Andrea about Equites, which is it's a heck of a story, and it's a lovely story about these big boxes, which are bucking the trend. So, looking forward to that. And then we have the whole Eskom story, which again has now really got into the limelight. And then in the second half, it'll be a bit more relaxed, where we talk more about have Warren and Charlie lost it. Okay, let's go. And a really good show for you coming up tonight. Stephen Nathan is our co-host, as always, on a Tuesday evening. Good to have you with us, Stephen.
Great to be here, Alec.
And then we're going to be picking up with the chief executive of the most successful property listing on the JSE. His name is Andrea Taverna-Turisan, and if you know anything about property, you know he's the CEO of Equites Property Fund. Andrea, good to have you with us as well this evening.
Thank you, Alec. Nice to be here.
A big story at Eskom, where the National Prosecuting Authority managed to get a 1.4 billion rand order against the crooks who stole that much from taxpayers. We'll have Chris Yelland, Paul O'Sullivan, and Sikonati Manchasha giving us the lowdown on that story. And then in the second half, after 6 o'clock, Charles Savage from Purple Group will be addressing the question of whether Warren and Charlie have lost it and should just be leaving the scene. That's the Berkshire Hathaway chairman and vice chairman, aged 90 and 97, who say that retail investors have kind of lost the plot. And then we'll be talking with Kooyman on the new chief executive of Berkshire Hathaway, predicted last night by my colleague, Justin Rowe-Roberts.
As I told you, Alec, if you watched the Berkshire AGM in detail, Warren and Charlie did give a few hints, and those hints came true. So good to see Greg Abel's going to be the successor to Buffett. Yeah, looking forward to the new generation at Berkshire Hathaway.
Official announcement coming only hours after they heard Justin making that very strong prediction. It's something that many have been waiting for years. It's a 650 billion rand company, and Greg Abel will be the new CEO. But first, let's pick up with the day's news headlines with our editor-at-large, Kokkie. Didn't Adrian Gore say 50%? Is that already ages ago? No.
Alec, we can't hear anything. Normally we're able to hear this. Is that deliberate?
How long is this?
A minute and
Another 1 minute. We must ask her. In fact, you must ask. No, we must ask her. We'll try to find to keep it down to 2 minutes. Because it's been going on for 3.5. BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movements in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Here's Justin.
The JSE All Share Index traded low at 66,300. Some of the day's highlights included Equites Property Fund was 6% low on the day to R19.20 a share as the company released its year-end results. Prosus lost 3.5% to a touch over R1,500 a share. Sabanya lost 3% to 67 Rand, and Telkom also fell by 3.5% to 37 Rand a share. In the currency markets, the Rand was flat against all the major currencies to 14 Rand, 46 cents to the dollar, 20 Rand and 8 cents to the pound, and 17 Rand and 41 cents to the euro. Gold is up at $1,794 an ounce. Brent crude is also up at $68 a barrel, 70 cents. And the premier cryptocurrency will put you back 790K Bitcoin.
This market report was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Stephen, I know it's a while ago before you founded 10X, but you used to be the top-rated analyst on the Johannesburg Stock Exchange. You need to give us a little bit of an unpacking before we do talk to Andrea. As Justin told us, Equites' share price was down by 6% today, but the price is R19.23. Equites' net asset value, property company, is R17.25. So basically, investors are still saying we're prepared to pay a premium for management.
Yes, I think that we just at the outset say that property was not my forte. Used to valuing financial services companies, but as you say, the valuation of property is, in a sense, it helps investors because they do value the underlying future cash flows of the business, or at least they estimate that. Imagine if every company had to do that. Let's take Tencent and a few others. Can you imagine the wild valuations they've got? So there's a more reasonable basis for doing that, but it still is subjective, and it's still quite a long-term valuation that is being done. But I think that Equites, as you said, it's had a phenomenal run as a business and also as a share price, and it seems to be one of these where you kind of buy on the rumor, sell on the fact. So it's had a fantastic run, and the results to me looked really good. But the market obviously was anticipating before that good guidance, and it's a great company. So you can't take one day in isolation. If you look at the longer term trend, it's absolutely fantastic. And just revenue, I believe, was up 19% in this kind of environment. I can't think of any other property company that has come close to that. So it really looks like a fantastic performance, and I'm looking forward to what Andrea has to say. Just one thing that also struck me, you mentioned the price at about 19 Rand 25, I think, today, and the dividend was 155 cents. So if you just look at the yield there, that's an 8% yield. And what is really interesting is that the weighted average lease has increased from 10 years to 15 years. So there's a lock-in there of roughly 15 years of contracted income. Shoprite is a major tenant with a 5% escalation. So if you think of it in a way, you're buying a quasi bond with some great tenants and some great price increases locked into that yield, which if you buy a government bond and you get 8%, you get 8% every year. You get no income growth and no capital growth. So it looks like a really strong set of results. And yeah, as I said, it'd be interesting to hear what Andrea has to tell us about that.
Thanks for giving us all that background, Stephen. Wonderful insights there. Andrea, the story is big box warehouses, which is booming around the world thanks to people like Amazon and others in that field. Before we go into the financial results, just to pick up with Amazon, did you have anything to do with the 14 billion Rand transaction that they have now concluded in Cape Town?
No, absolutely nothing. I mean, that's Amazon, their wide service division. It's not their retail online e-commerce division. They're not present in South Africa. We are currently developing a last mile delivery platform for them in Peterborough in the United Kingdom. But that division is not present in South Africa.
So when we have a look at Amazon's likely introduction to the South African market, there are lots of rumors around it. You would be one of the first people to know, presumably.
I would like to think so. I mean, if I wasn't, then maybe I wouldn't be very good at my job. Yeah.
And nothing's on that score yet.
Not that I've heard of. Yeah. I mean,
Okay.
I mean, we've we've had a few. Sorry.
So the Naspers guys can breathe another sigh of relief for the moment, anyway. I'm very interested to look at your background. That you were actually educated in London and at Harvard Business School, and coming to South Africa with that kind of focus, presumably, and I know you've got a big business in the UK, must have given you a global perspective when you have a look at where the growth areas are in property.
Well, yeah, I cut my teeth in property in South Africa, though. So, I mean, when I first came to South Africa, I actually was a commercial property broker. I had an ambition to build a portfolio. My father had a construction company in Zambia for many, many years, and I was born in Zambia and grew up in Zambia and got shipped off to boarding school in the UK at quite a young age. And I came to Cape Town in 1995 when a lot of people were running scared, I suppose, and I saw it as an opportunity. And South Africa has been extremely kind to me.
Andrea, as Stephen said, I had a look at the results today. They were awesome. Just a few qualitative concerns that I had. I saw 50% of the properties were independently valued by executives. NAV, obviously a portion of that is attached to NAV uplift, executive compensation. Is that not a bit of a conflict of interest?
Not really. I mean, if you look, I mean, SA REIT and the JSE have got a 3-year rotation on valuation. So international norms are that 1/3 of your portfolio would be valued at any given moment in time. About 18 months ago, our board decided that we wanted to be a little bit more conservative than that. So we are valuing every single property on an 18-month rotation rather than a 3-year rotation. And if you, it's slightly skewed with the 56% because that's combining UK and SA. If you look at just the SA property portfolio, externally valued in this financial year was just north of 60%. So we certainly are valuing our portfolio significantly more than our peers. Not that we measure ourselves against our peers in these things. We do take an internal view in terms of best practice. And the reality is, as we grow and get bigger, the board may at some stage in the future decide to do those valuation on an annual basis, and we'll see how that plays out in due course. But that is a decision that our board will make in due course. We feel, as things are at the moment, that we are definitely one of the leading sort of management teams when it comes to these things.
And you also increased your distribution at a time when everybody else in the property field is actually slashing theirs. But I guess the big story, and people love a story, is that warehouses are going up in increasing numbers. The whole N3 route between Durban and Johannesburg is chock full with trucks. And I guess the more trucks you have, the better it is for your business, because they actually can go to warehouses anywhere and not necessarily next to a railway line.
I mean, the reality is that I think it would be in South Africa's interests if the inland port at Cato or the inland port at Tambo Springs basically were to be unlocked and developed. I think it would take a lot of pressure off our highways, and as you know, the maintenance of those highways with this volume of trucks on them is disproportionate to sticking those containers on trains. And the reality of it, if Durban has got any ambition of recapturing its primary status as the leading African port, it's number 3 at the moment, I believe. These inland ports are becoming essential. The reality of it is that the goods coming into Durban predominantly go into the SADC countries and into Gauteng, which remains the economic hub of sub-Saharan Africa. And the most efficient way and the cheapest way of doing it, if the facilities were put in place, would invariably be by rail. And unfortunately, the situation at the moment doesn't allow for that. And the most efficient way is to bring it up by road. And you'll see obviously massive warehousing coming up on the R21. Obviously, also up by Centurion on the N1. I mean, the Waterfall estate has exploded in recent years. So prime logistics warehouses and the technology going into them are a brand new evolution, or when I say brand new, have evolved dramatically in the last 10 years. And the big benefit for us is some of the historic buildings that were put up 15 and 20 years ago are technically obsolete. So if companies were wanting to come into the 21st century and introduce the necessary technology inside and outside their warehouses and compete on a supply chain basis to be best in class, the reality is that it would be in their interest to be talking to us.
You mentioned Tambo Springs. We understand that the ex-Steinhoff people are behind that. We also understand there's been massive allegations of corruption. Are you on the inside track?
Well, I mean, it was the tender was awarded in 2016. I'm of Italian origin. It was awarded to Ferrovie Italiane, which is the Italian railway service, and I believe, and I don't know the detail, but I do believe that there was something that shouldn't have happened, and that has been, I believe that tender was scrapped, and there's a couple of people that are trying to get that back on track and get it moving in the right direction. And I'm not saying that it's going to happen overnight, but what I am saying is that it would certainly be in the interest of Gauteng to have an inland port. There's no question.
Stephen, last question for Andrea.
Andrea, obviously you've got a lot of potential to grow, but maybe just what are the big levers that you have? What are the big opportunities that you see over the next 12 to 18 months? Growth maybe in South Africa and then also in the UK.
Well, in South Africa, I think the biggest driver of our growth is going to be supply chain efficiency. I don't think e-commerce is quite big enough yet as a platform. It sort of represents approximately 4% of RAND spend at the moment. And real estate decisions are not being made at the moment to accommodate e-commerce. So supply chain efficiency is the one driver of that. The other driver whereas in the UK, it's the complete opposite. I mean, the UK went from 19% of online sales pre-COVID to sitting approximately at about 33% at the moment. You've got 50 million square foot plus, which is over 5 million square meters of space taken up last year. 25% of that was Amazon in the UK. The reality is that if you want to compete with Amazon in the UK, you better start planning pretty quickly to take them on head on, because I mean they're not stopping anytime soon. I mean, they're an impressive organization, and the reality is that, you know, they're talking that in the next sort of 3 to 5 years that, you know, that number could become 50%. You know, whilst I'm punting my own book, I do think we are social by nature as human beings, and I do think people still want to shop and still want to go to the high street and still want to go to the shopping center. But these places are going to have to reinvent themselves to become more proficient in terms of delivery. And the reality of it is that the benefit for us is that for every pound that is sold in a shop, the supply chain warehousing capacity needed, you need to multiply that by 3 to deliver it on an online platform. And the consequence of that is what we're seeing is that warehousing is becoming slightly bigger in the UK. That's also a consequence of Brexit and supply chain disruptions. But more importantly, we're seeing the last mile delivery platforms, which are very land hungry. They tend to occupy less than 20% of the land that they're on, because there's just so many vehicles coming and going. So when you put all of these things together, it's I think that the road is very rosy for us in the next 3 to 5 years.
Thanks for sharing that with us, Andrea. It is a story to be followed in South Africa. If you want to invest in property, I don't know, Justin, if you could find a better property stock than Equites at the moment.
Absolutely unbelievable. I agree, Alec. I think the question comes in now as an investment case. I mean, Equites is run, it's trading at a premium to NAV. When you can get discounts, say a well-diversified REIT such as a Redefine or Growth Point, but then it just poses the question, value versus price, and I think you're getting great value with, or great business rather, with Equites.
Thank you, Alec. Thank you, Stephen. Thank you, Justin. Thanks, Andrea. Okay.
Well, the big story of the day is that the National Prosecuting Authority's investigating directorate has been awarded a restraint order of 1.4 billion rand against former Eskom executives and a guy who we've been talking about a fair amount, Mike Lomas, former chief executive of Group 5. We've got with us Paul O'Sullivan and Chris Yelland. Chris, I want to kick off with you first, because we've been covering the story with Paul, and I'd like to get his take. But a few days ago, we were hoping to talk to you on the power ships off the Cape Coast. You were skeptical that it was a good deal for the country. Last night, we had the chief executive of DNG Energy, Aldworth Mbalati, telling us that there was massive corruption in the awarding of that contract to the Turks, to these power ships. Now, put the two together, does it make sense? In other words, are we joining dots where they do exist?
Look, the power ships contract for 20 years with fuel making up 1 rand per kilowatt hour out of the tariff bid of 1.50 rand per kilowatt hour. That means that the fuel itself is 2/3 of the tariff, and that tariff, that 2/3 is linked to the US dollar rand exchange rate and the international commodity price of liquefied natural gas, LNG. And of course, the price is also linked to the carbon price. Now, I don't know if you saw what's happening to the carbon price in Europe today, but it's like it's really gone up dramatically. And in South Africa, the carbon tax is very low, and the upside potential for the carbon tax in South Africa is very high. So there's massive upside risk in that tariff. That tariff is not fixed for 20 years. It's not linked to CPI for 20 years. It's linked to these variables that have got massive upside risk.
So it's
And
either
that
it's
means-
either incompetence or corruption. Paul O'Sullivan comes in now. Paul, we're going to be talking in a moment also to Chris about the latest scandal to hit Eskom. We've been covering this with tubular construction projects, etc. When you look at these power ships, from what Chris has outlined to us, is it incompetence by the government, or is there a lot more to it? Chris, have you been following the story of Trindade and what they call tubular construction projects, which is today came to a head in the Johannesburg High Court?
Well, look, you know, these executives have been arrested in the past. Some Eskom executives and the tubular executives. There's court cases pending, and we hear now of massive corruption under the cloak of supplier development programs and VEE, probably well-meaning programs and intentions that are literally massively abused and a vehicle for corruption. And today we hear that the SIU has frozen the assets, was the NPA that's frozen the assets of these executives, both the former Eskom executives and tubular executives, to the tune of, well, over R1 billion. It's hard to imagine, corruption on that kind of scale directed at a few individuals. But I think it's more than just a few individuals. It's endemic and multi-layered within Eskom and within some of its contractors.
But
Chris,
Chris,
as I say, it's,
yeah, let's just go into this guy, Abraham Masango. Now, I worked in a corporate for a period of time, and I had the good fortune to be a group executive at the corporate, which was like a seriously big job. He's a group executive, so he's not. This is not a guy who's just running around doing deals on the side. A group executive would make him probably one of the top 20 in Eskom. A very powerful man, on top of which his portfolio was group capital. Now that scares me rigid, because if you have a crook who's running a portfolio like that at the very top, and group capital is really where Eskom, the big money of Eskom lies, you've got to ask yourself, how did someone like that get to a position of such importance?
well, you see, he started off at Kusile. He was the project manager at Kusile, so he was intimately involved with many of the contractors, and he got pushed into this position of, as you say, a group capital executive. I mean, this is on the exco of Eskom, probably, along with about 15 to 20 other executives. So he was in that top of the list. And as you say, group capital is where the big money is. And it's just astounding how money gets channeled from contractors. Apparently, it gets channeled from contractors to other entities under the guise of donations towards community development, schools, etc. And then this other entity to which the money is channeled then funnels the money to individuals at Eskom who are responsible for gathering money from these contractors. And of course, the contractors have lots of claims for extras, so that they are favored in terms of overinflated prices for extras to the contract. So contracts begin to escalate, donations come in from the contractors, the money gets channeled back to these executives. That's how that's the narrative that is presented by this massive data dump that we have seen, and which is resulting in the latest stories. and I believe there's much more to come. The media are going to leak this out bit by bit to maximize every opportunity, for readership. And so I think the story's got a long way to run still.
Chris Yelland is one of our go-to guys when it comes to issues on Eskom and energy. He is an electrical engineer. Paul O'Sullivan is a forensic investigator. What Chris said, Paul, does that lie? Is that exactly the same as the modus operandi in this case? You've been very close to this case for some years now. Just explain that, Paul. Explain that. So they went into the bank. This guy, Frans Lacaudi, went into Absa with a suitcase of 5 million rand. Sounds pretty dodgy mafia type stuff. And then put it over the counter. He withdrew the cash. Oh, that's even better. So it was just a front. There was no good going on there. Now, why is all of this suddenly getting a lot of attention from Eskom? We've known that Eskom's been corrupt for a long time. Mark Pamensky, the Guptas. You've got to go and look back at the boards that were on, the Eskom boards that were there at the time of the Guptas. Half of them at least were people closely associated with the Guptas with very little experience of serving at that level. Some pretty young ladies who maybe got conned into doing that. Why is it only now that this is all coming? Is this a whole political thing? Not this particular one, but Eskom indeed. And Eskom has huge debt, which we as taxpayers look like we're going to have to either pay it through higher tariffs or through a government repayment of the loans. Paul O'Sullivan from Forensics for Justice, bringing us up to date on the latest round in the saga that he's been living with since, as he told it, for the last 2 years, exposing one Antonio Trindade, who himself he owned a company called Tubular Construction Projects. He brought in, would you believe, the former CEO of the Group 5, Mike Lomas. Lomas is in the process of being extradited back to South Africa from the UK, where he likely will face a very lengthy prison term in this country. Extraordinary to go from the corner office of a major corporation into jail. And so too, Abraham Masango, who was a group executive, and I cannot stress this enough. These are a group executive at Eskom is like in extremely rarefied atmosphere. They get paid millions of rands every year. They don't need more money unless it's driven by greed and corruption. And that's precisely what happened in this case. Right, let's pick up with our next story on Charlie and Warren from Berkshire Hathaway, Justin.
Yes, Alec. We've seen some attacks from the Reddit Wall Street Bets traders around Charlie and Warren's comments at the Berkshire AGM, which I actually thought were fascinating, calling it a casino and a Robin Hood of sorts. Charles Savage, I'll call you a sophisticated investor as a result of being chief executive of a listed company, but I know you're going to be boxing for the retail investors as well. Where do you sit on this one?
Look, I'm with Team Reddit. You know, the world's changing; it's changing fast, and you know, you can't call people gamblers because they potentially behave a little differently to the way you did back almost 80 years ago. And I think both Warren and Charlie have got to remember that what they did is they took high conviction bets on companies that they themselves fell in love with, and this Reddit crowd are doing the same, and I guess getting accused as gamblers. I mean, the one thing I've got some sympathy with Charlie on is that, you know, in Robinhood you've got some gambling mechanisms, which I think and products which I would describe to more towards gambling than investing. So, you know, some of those option ladders and option structures and the more derivative products, and then the margin lending, those are not for me typical investing products. But in our experience, about 5% of the base are investing exactly as Charlie and Warren would want them to behave. And I think that's the key, is if we opened up that Robinhood community and let Warren look inside, or Charlie look inside, I think they'd find that 95% of them are behaving exactly the way you would want them to.
Okay, so social media is full of comments like this one from a guy called Howard Linson, who's a trader and a technology investor. He calls Buffett and Munger old men cranky pants. We then get a guy like the venture capitalist, Avichan Garg, who's quite well known, who says, we need to stop listening to Buffett and Munger for investing advice. Software changed the game and left them behind. And Balaji Srinivasan, who again, very well-known venture capitalist, says, I respect Buffett and Munger's accomplishments, but they've been riding a long US bull cycle for the last century. So it's almost like the guys are 90 and 97. Forget about them. They are to be forgotten. They are to be dismissed. There's a new world.
Yeah, look, I don't buy that. I mean, you know, firstly, what did they teach us, and are those lessons still relevant? And that, you know, what they taught us is to start young. I mean, Warren was 11 when he started. 2 is they said, you know, buy stocks you fall in love with them, and don't sell them until you fall out of them. So marry them for a long time. And 3, you know, in their own portfolios, Warren has had about 50% gearing in his own portfolio over the life cycle of his portfolio. So he's geared himself as well, but he's geared himself very responsibly into high conviction bets. So no, the lessons are not, they're not to be thrown away. Those are lifelong investing lessons. And you know, for me, it would be very short-sighted to throw it away just because technology's got involved. I think the key here is, I looked at Robinhood's Twitter following just to get an idea of how many, you know, what percentage of people are we talking about, and then the Reddit groups. And about 200,000 people are actively following Robinhood and commenting on Robinhood's Twitter profile. They've got something like 12 million clients. So this is a case of the 5% driving the dialogue. You know, the other 11.5 million people are silent on this stuff. And I think that's where the real kind of magic is, in that those people are doing exactly what Warren and Charlie would have said. So no, it's not time to throw them away. They're the best of the best, and the lessons that they've taught all of us will be time tested.
Stephen Nathan, what's your thought on all of this, on this sudden aggravation by people, some retail investors, towards the two old fellas?
Yeah, so you know, I'm a little bit more in the old school camp. I think that you know, you have to look at people's motives for investing. You know, are they investing? Is this investing or is it speculation? I mean, just anecdotally and very relevant, a friend of mine's in the gaming industry, and he's been analyzing gaming trends.
Oh, Stephen, looks like we've lost you for a minute. But you had you were following just in some.
Many companies have done fantastic. These are online gaming I'm talking about during COVID.
Are you
In the US,
yeah, we're breaking up.
Sorry,
Would you
breaking
mind
up there?
switching off your video? That could be what's causing the bandwidth issue. We have this amazing software called Riverside.fm, but sometimes there's South African bandwidth gets the better of us. Stephen, let's try now.
Okay, apologies. Sorry, I don't know where did you get the gaming piece about how online gaming in the U?
No, we just started
online
there,
gaming in the. Okay, so apologies. So online gaming in the US during COVID, during lockdown in the US, and when the checks were paid as part of their COVID relief, there's been a direct correlation between increasing in gaming revenues and gaming activity. So, you know, there's definitely something unusual happening over here. And I think that, you know, it comes back to, you know, is this speculation? Are people doing it because of long-term investing? And Charles is exactly right. It's fantastic to bring many more people into, you know, into saving, into investing. But I think the motives are.
No, and we've lost Stephen. Charles, let's just bring up one of the issues that has been said by Charlie Munger. I remember this is a 97-year-old. He says that Bitcoin is, quote, disgusting and contrary to the interests of civilization. He mentioned a few times in the Berkshire Hathaway AGM that it is contrary to the interests of civilization on various other issues. Is he losing it at 97?
Yeah, look, I mean, neither Warren nor Charlie have been fantastic tech pickers. You know, they were very slow adopters of tech and eventually in on Apple and, you know, made 100 billion, I think, on Apple in the last couple of years. But they're slow to adopt new technologies. And I think they're just a bit slow. And, you know, the future of money, for me, there's no argument that can be made that doesn't say the future of money doesn't look more like crypto. And you know, is it Bitcoin? I don't know. Is it Ethereum? I don't know. Is it Dogecoin? I hope not. But you know, the bottom line is I don't know. But I think Charlie's that's a ridiculous statement. I mean, I think paper money would have faced the same friction when it was invented all those 100 years ago that crypto is facing. And yeah, maybe they are getting a bit long in the tooth when it comes to new technologies.
Charles, just a question that I've been thinking about. I mean, I haven't been sleeping very well the last few evenings. The retail investors, I mean, this has obviously been a big pickup since March 2020. A whole lot of retail investors into the market, which I agree is awesome. People get to understand about the companies they invest in, etc., and all those good things. There's so many benefits. But these retail investors, they've only ever succeeded. They haven't gone through. I mean, there's been a few 10% corrections. What happens if there's another, say, March 2020, an 08, a dot-com bubble, a 1987? What kind of panic do you think we're going to see in the markets?
Yeah, Justin, that question looks like it might have been asked by Stephen instead of you. You should get some sleep because you're young and you can live through these things. Alec and I have seen a few bear markets. You know, the bottom line is these guys have not had it easy. So yes, the guys who arrived in March, they arrived in a storm, high volatility and very difficult market conditions. And it took a lot to ride out something like Sasol. Just go look at what the Sasol share price did from March today. And they rode it out. They made hundreds of millions of rands riding out Sasol, and a lot of them are still in it. But, you know, for the first time, forget about the investors who arrived in March, because they've been arriving in mass for the last 6-7 years. Robinhood's not an overnight success story, neither is Easy Equities. And in South Africa, this has been the toughest investment period that I have ever seen over the last 5 years. I mean, if you were an asset manager the last 5 years, you've had your worst 5 years ever. And in that 5-year period, the average retail investor has outperformed the index which puts him in the top 10% of asset managers. So, this exclusive group of people that used to be able to beat the market used to be called asset managers because they had front row seats to the shares. They had disproportionate access to CEOs. They had access to information and systems and low trading costs and all those kind of things. Those things are all gone. Those advantages are gone. The retail investor's got the same advantage, and I'd argue that he's more incentivized to look after his money better than an asset manager because it's his money and he knows exactly what he wants to do with it because he's now informed. So, I think, Justin, you must get some sleep. Don't worry about these retail investors. They're smart, they're savvy, they're resilient, and they behave exactly the opposite way to what the textbook taught us they would behave. They should have. If I go back to 2008, which obviously the last bear market I saw, in 2008, retail investors ran away from the markets in droves. They sold stocks and they ran away. Stockbrokers literally got closed down because they were running away so fast. This time around, they ran towards the storm. They saw an opportunity to buy stocks at levels that they hadn't seen in 5-6 years, and they took money off the sidelines and added to their investments. And that's what Warren Buffett would have taught us to do, right? Buy when everyone's fearful. And that's what the retail guys are doing. So I think they'd welcome the next storm. They're young, they can ride it out, and they can see a good opportunity. And so if we have a crash, which we will have one day, it won't be a case of investors running away. It'll be a case of investors finding more capital to add to their stack of investments.
That's fighting talk. Stephen, you've also seen a few bear markets in your time, as I have and as Charles has. I don't remember anybody running towards the storm in 1987 when the market dropped 25% in one day and then continued smiling thereafter. Are you of the same mind that Charles is at, that we have a new maturity amongst the retail investors? Stephen? No, I think we've lost Stephen. His connectivity, unfortunately, Charles has saved us there.
Yeah.
I mean, come on, 1987. You remember they left Cockcris's at 90 Rand going down to 4 Rand and then finally being switched off.
Alec, you're forgetting that in 1987 I would have been in Standard 6. So no, I don't remember 87, but I remember 98, 2008, and 2008 was probably the one that reflects clearly on my memory. But the difference about this last storm that we had in March is that it was very short-lived and very, very steep on both the entry and the exit of the bear market. And if anything was going to scare investors, it would have scared that March move this time last year would have scared them. I mean, one thing we did see is that those that were scared were closer to you and my age than to Justin's age. So there's and that's about time, right? You and I are worrying about our assets performing for us in a much shorter period of time, and so we can't afford a 40% loss on our portfolios. But if I'm 30 years old and all I've invested is 10% of my assets, and I've got a whole 30 years ahead of me, then it's an extraordinary opportunity, and it's not rocket science. So I think Charlie and Warren, honestly, I think they'd be proud if I could share my data with them about our customers and their behaviors and what they're doing with their portfolios. It's textbook stuff. I mean, and they, interestingly, I was on a kids group the other day. I was talking at Cares actually, and guys were quoting stuff out of your book, Alec. These are grade 7, grade 8, grade 9 kids, and they were quoting stuff. I said, "Where did you read that?" And they were like, "No, I read it in Alec Hogg's book."
Wow.
They're doing what you would hope them to do. So that was, they're educated, they're smart, they're savvy.
Now, well, obviously, the new way of investors are far, far smarter than the old way because they read the right. They read the right. No, I'm seriously impressed, and well done to the guys. It was actually, that book was written for people who are coming into the market to begin with, and exactly. You've seen a lot of that. It would be nice to know that the retail investors, at least the South African variety, let's not talk about those in the United States on Robinhood, who some of them are just punting for the heck of it. but the South African variety, both yourselves and Standard Bank with Brett Duncan have tried to say invest, don't trade, put the money away. And when you see Amazon maybe getting at 2,000 were it to fall that far, wow, what a buying opportunity. And that's kind of the psychology. So very interesting. Charles, if you've got a moment to stay with us, Kokkie Kooyman joins us now because we're still staying with Berkshire Hathaway. And Kokkie, we've got a new chief executive of Berkshire. How long have you been waiting to hear who the successor to Warren Buffett would be? So it doesn't mean because he's now been the anointed one that he is going to be the appointed one. Warren, the way he's going, expects to live for certainly at least 103, which is the official retirement age at Berkshire. Bill and Melinda Gates Foundation, I guess, will continue, but that marriage isn't. Charles, from your side, Greg Abel, is he going to make much difference to Berkshire Hathaway, i.e., you must have a lot of your clients who are invested in Berkshire. Do you think that once Warren goes and Greg takes over, they will still be invested?
Yeah, look, I think people are going to sit and watch it closely, especially his first big decisions, and then make their choices once they've lived alongside him. I don't think anyone's going to sell it for now. The transparency to their holdings and what they own is more important for now. I guess what people will judge him on is the decisions he makes in changing that portfolio moving forward. And his first few will be critical.
Kokkie, that is interesting because there are two sides to Berkshire Hathaway. There's the subsidiaries, the 70 or 80 subsidiaries, which Greg Abel comes from Mid-American Electricity, which is now Berkshire Hathaway Electricity. And then there's the investors, the investment side. He doesn't have much experience on the investment side, which is what so many fans of Berkshire Hathaway like, and that's why they follow it. So the big question for both you and Charles, would you be continuing to hold Berkshire Hathaway, both in the light of the unpopularity of Buffett and Munger amongst retail investors, and secondly, now that a non-investment guy is going to be taking over as CEO? Starting with you, Kokkie. Thank you, Kokkie Kooyman, who is with Denker Capital. Charles, your reaction to that question, would you still hold Berkshire Hathaway?
Yeah, I hold it. It's not a big portion of my portfolio. As you know, Alec, I'm a huge fan of Warren Buffett, and it's more his investment philosophy that I like. And so long as Berkshire beats me at investing in the market, I'll keep holding it. But if I start to perform it, then I might reduce my holdings. For me, it keeps me honest on my portfolio. It's a good benchmark portfolio against which to track your own performance. And I'll be watching it closely. I mean, I was when CEOs leave, I'm always skeptical of whether you can replace them. And I think in this instance, you couldn't get a bigger characters than Charlie and Warren. So I think there is quite a lot of risk in that succession planning. But I'll keep it for now and watch with interest very closely.
Well, Stephen Nathan seems to have a better line now. Lovely to have you back, Stephen. Just to close off with, because we're getting to the end of our program tonight, would you hold Berkshire Hathaway in the light of the recent developments with the appointment of Greg Abel and the unpopularity among retail investors of the two principals?
Yeah, so I think that the next 20, 40 years are unlikely to be as good as the last 20 or 40 years. In fact, I think the last 10 years, Berkshire has underperformed. And by his own admission, Buffett has been saying for some time now, you can't expect the same historic performance. So I think that the glory days are over, and I think it's going to be very difficult for them to even beat the S&P 500, given the share size and the geniuses behind Berkshire Hathaway. It's difficult enough to replace a Steve Jobs or a Jeff Bezos at Amazon, but the same should be said of Berkshire. It's a remarkable company that hasn't been replicated anywhere, with a sheer genius Buffett at the helm. I think if you want to buy an index fund, you're probably going to get similar performance. But it's a defensive stock, so I think it will do well if tech goes off the boil a little bit. So it is defensive, but I really wouldn't expect fireworks. Now, Alec, I'm going to quickly share with you a fascinating statistic about Warren Buffett. Warren Buffett, his net worth is about $85 billion. But at age 65, which was 24 years ago, his net worth was $3 billion. $3 billion. So over 95% of Buffett's wealth has been created after the age 65, when most of us are retiring. And the point about Buffett is his returns have been good. He's compounded at about just over 20% per annum. But the real story behind Buffett, and I think Charles mentioned this earlier, is he's been doing this for over 60 years. And it's the combination of compounding at an above average return. So if you've got a very long-term horizon, you can probably stick with Berkshire. Thanks.
Brilliant. Thanks to Stephen Nathan and to Charles Savage. And I want to remind you that we've got a webinar tomorrow on something which will outperform Berkshire Hathaway. And the reason for that is that South Africa, the Treasury, has closed its tax incentive, the 12J tax incentive, because it was just too good to be true. Unfortunately, that ends on the 30th of June. But you have got a last crack at this option. If you invest into these companies that are qualified 12J companies, you can write back the investment immediately against your taxable income. So for people who are earning the big bucks, 125,000 or more a month, it's kind of a no-brainer because you've got an immediate 45% discount on the investment that you're making, and then you get the returns coming every year from these companies. You have to invest for 5 years, but it is a spectacular tax incentive, which, because it's so spectacular, has now been done away with. If you want to find out more about this, tomorrow we've got Leo Ati, who is with Lucid Retirement Village. Now, if you want to talk about something that's sort of safe and bet, that's what it is. He'll be on our 12J webinar at noon. It's free to all. You have to, though, go on to biznews.com and register. That's all you have to do. And then have a look at it and see where the 12J is for you. I would urge those people who are in the top income tax bracket to take advantage. Right, well, BrightRock, where did that come from? BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movements in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs matched life insurance that changes as your life changes. And Justin will play that tonight.
The JSE All Share Index traded lower at 66,300. Some of the day's highlights included Equites Property Fund was 6% lower on the day to 19 Rand 20. Process lost 3.5% to a touch over 1,500 Rand a share. Sabania lost 3% to 67 Rand, and Telkom also fell by 3.5% to 37 Rand a share. In the currency markets, the Rand was flat against all the major currencies to 14 Rand 46 to the dollar, 20.08 to the pound, and 17.41 to the euro. Gold is trading at $1,794 an ounce. Brent crude is up at $68.70 a barrel. And the premier cryptocurrency will put you back 790,000 Rand a Bitcoin. And in the US, the markets are all in the red. That's the Dow Jones Industrial Average, S&P 500, and Nasdaq.
Tell us why. Why are the markets in the red?
Janet Yellen, the US Secretary of Treasuries, announced that we could be expecting rate hikes.
Well, between my walk and your rate hikes.
Sooner than expected.
Okay, so Janet Yellen says interest rates are going to go up. When interest rates go up, shares go down. Not immediately, but certainly over the longer term. This market report was made just for you by BrightRock, the first ever needs matched life insurance that changes as your life changes. Thanks for being with us tonight. We'll be back again tomorrow at 5:30. Until then, from the team here at BizNews, cheerio. Now, isn't that funny? When we went to the phone, they couldn't hear him.
Mm-hmm.
It didn't go through the desk, or didn't go through the desk to Riverside.
What could they not hear at
The people
on
on
live stream? They couldn't hear.
and Steven.
Stephen also couldn't hear.
Yeah, they couldn't hear the. Stephen couldn't hear.
At the radio.
So there's something with this desk that we need to get Gavin in tomorrow, unless there's something plugged in that shouldn't be plugged in, but I can't see anything there. And that, maybe that channel, no, that can't be it. But let's see if it's in there. Let's hope that it has recorded on here. If it hasn't recorded on here, then we got a problem. Then we got a problem. But let's check that. That's easy enough to check. Oh well, okay. Thank you very much, as always. It was a little more stressful than usual. There's sure, that was a bit more stressful.
Stephen's just apologized.
Hello, Jet. You couldn't hear them on the phone when they were on the phone, through YouTube or through the live stream. Just YouTube, because Stu said the live stream. Who's Stu?
She was gone home.
Oh shit. She's gone home. Okay, so because he was saying the live stream was I think he said it was working. So that, but we're going to double check now. We're going to quickly check the card, and if the card was working, then it's then it's YouTube's problem. Well, I don't know what it is, but I'll speak to Gavin. I'll ask him. I don't even know.